Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So in the short-term price action, you can see that our suggestion mostly is valid, and we do not see any reasons to change our trading plan. The anticipation of the bit deeper downward action on the euro currency before market potentially could turn up. We call it as a potentially because, well, in the current circumstances, we can't be sure for anything, and well, it might happen that euro will just keep going lower. It depends on the geopolitical situation, mostly. And actually, we just could say that if market will able to stay above 112, 111.80 area, it keep chances to go to as far as to 1.17 area, based on the weekly background that we have. If not, the road to the 1 or 9 will be open. So, as you can see, really big bet stands on the table right now. So our task here is relatively simple. Once market will come to the predefined levels, just watch for bullish reversal patterns, find the place where we could take the minimal risk for trading, and see what will happen. In this week in report, we mostly have dedicated to the financial part of the current situation in the United States. We're trying to keep the geopolitics aside, although we can't totally avoid it. It's just because it has direct relation to the value of the United States dollar. And if you would like to know the details, as usual, just read the report, or at least the conclusion part of the report. Here you understand what's going on here and why the geopolitical tensions are so necessary to Biden administration. So actually this repeats the situation in late 80s, when inflation in the United States was also around the 12%, and maybe not the 20%, so it's have the two-digital level, and only victorious war in Iraq was able to hold the state Democrats on the throne. So that just explains how geopolitical tensions might be important if they're under control. So, and we talked about some moments that are tricky by our view in the current circumstances. But here, in a short-term perspective, for a short-term perspective on the euro currency, we could say the two things. First of all, geopolitical tensions will not stop. It's just United States use it as a great tool to control the sentiment inside of the market and to attract attention from the real problems inside the United States. Especially in the shadow of the light of the common elections in the Senate in this year in November. So this is really hot topic for the United States. Since the tensions will not ease in the nearest time, they will have the direct impact on the economy of the European Union. If any sanctions will be imposed over the Russia, it definitely will make impact on the economy of the European Union as well. The tension stands in Europe, which is also brings nothing good. Finally, just from the financial point of view, the more aggressive Fed policy and running into the safe haven as tensions will keep going, all these moments makes us think that in the nearest 3-6 months, hardly euro will have the background for a real bullish reversal. Yes, we could suggest this might be some kind of the A, B, C, D retracement, more or less extended on the euro currency in the near term, but currently, I do not see the real background as geopolitical, as financial, that could let euro to grow more significantly. So that's why, in a short-term perspective, where we'll be watching for bullish signs here, trying to catch the moment for a possible A, B, C, bar, D action, but at the same time, we keep chances that might be maybe failed later, as more chances that it might be, even if it will be successful, this ABCD pattern, it will be just an ABCD pattern. Hardly we will get real bullish reversal in euro currency. This could happen only in one case, if geopolitically United States gets big defeat, which hardly possible with this so short-term period. So that's what about the external factors that we have. Speaking on the purely technical moments, we still keep our suggestion that euro should move slightly lower by a few reasons. And first of all, speaking about the geopolitical tensions, it's already we have discussed this. And on the technical side, if you take a look at the fall time frame chart, now we have a few extensions. As you can see, based on this ABCD pattern, we have two areas to watch for. First is 1250, 1262, which is the COP target of this ABCD pattern. Major 61 is supporting agreement, and 127 extension of the butterfly. This is first moment. Second target is OP, it's 1180, and 112.10, it's 1618 extension of the butterfly. So at the first glance, this area looks more reliable. So it's stronger, and it's also agreement and butterfly and so on. But here we see the one problem with this area is that on the lower time frame, on the hourly chart, we have another minor ABCD pattern, right? And take a look at the price performance in relation to this pattern. So we have the OP. We said this is not the type of the reversal action, and we suggest the butterfly. Although we've on Friday said that maybe it makes sense to wait a bit for it, just because of this type of action that we've got on Friday. But as geopolitical tension increased, as you can see, market starts dropping. So we again turning back to this idea. And from this point of this ABCD pattern, take a look what has happened. Market hits the OP, shows the retracement, but it was not able to move in higher. It was not able to reverse up. So it means that this is a continuation of this action. And what next should follow? Right, market should follow to the XOP. Besides here, as you can see already, the bearish reversal swing has been formed. This market dropped more than the recent pullback here. But XOP agrees with the 618 extension, 1618 extension of the butterfly, which is the 1215 here, which more closer to the OP area. So that's why we should not withdraw this idea as market could keep going lower, especially if you will take a look at the harmony of the pattern. You could see that this low stands approximately the same area as this bottom. So that's why we should not ignore the chance that market could keep going lower. So what does it mean? It means that we consider both levels for possible entry, and here's up to your skill. So if you're experienced enough, you could try to catch the position right here. If not, you probably will have to split position in two parts. Try and take part here with the stops below this area or even below these lows, and then see what will happen. If markets keep going lower, then you could try to take another position around this area, if of course we will not get this type of action. Just collapse for all these areas. Of course, in this case, we will not take any position. We need to more or less gradual action. Maybe something of that sort, but even slower will be even better. So that's approximately the our plan for the Monday. But in the current circumstances around the Ukraine, I am not sure where the market really will open. So let's see what will happen on Monday. Keep in mind this plan, and hopefully maybe it will work, and keep watch for these two levels. So once market stands above it, we try to ride on the bullish scenario. Once it will fail, if it will fail, we will have to wait and search for something else.